Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the SPY and data sets for May 14th, 2025. And with that said, let's go ahead and jump straight into the data. It will pull up. There we go. All right. So just quickly going over the CPI today. Uh, I have to reload this. Hold on. Okay, so it's showing yesterday since, Eastern time zone. Anyway, um, CPI. It came in slightly lower than expected, which that was something we did talk about. The forecast, however, was technically anticipating it being pulled upward compared to the previous forecast, or compared to the previous CPI release. So, yeah, it pulled down slightly. This is suggesting that we are having consumer slowing just slightly. That's, you know, uh, both a good and bad thing for the market. For the economy, that's not a good thing. That does kind of push the recession narrative a little more, but we still have some other really important reports to check in on before we can really say that, yeah, the consumers aren't going to be picking up this summer. This is just one of many readings. We still have PPI, we still have consumer sentiment, we still have all sorts of stuff. So this is just a small portion of the puzzle. But going into the data sets today, let's see. Oh, nothing basically. We have Fed Waller speaking at 5:15, super early in the pre-market, so essentially really no data sets on the day. Um, okay, so yeah, we don't have any data really until Thursday. So, um, I'm gonna assume President Trump will tweet something or do some sort of speech or something because this is, you know, a long trading session with no news. With that said, let's go ahead and jump into the technical analysis. Just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. And getting into the TA, as always, let's open the daily time frame and the I'm losing my train of thought. Okay, daily chart, and we are gonna open our moving averages and our Bollinger Bands and just quickly go over these levels. I just want to eyeball this for a second before I get into it. Um, 5 miles at 520. Okay, so the market closed at 586.84. The overnight's currently up slightly. It's up 0.10%, so it's at 587.40. The 5 mile is at 572.08, and since the market closed at 586.84, almost at that 587 range, the 5 mile is going to pull up pretty drastically. I think it's very likely we're going to see it between our opening between the 576 to the 578. Uh, I know that's kind of a large range. It could pull up all the way to the 580. There's a very large range on how high this 5 mile can pull up. Now, the 5 mile is really, really, really key here. And because we've had two sessions where we did pull into the upper Bollinger, um, and again, I'll go back into that. Um, but because the 5 mile is going to be pulling up significantly, that means the upper bounds of the 5 mile is going to be closing in on where the market's trading very, very quickly. So let's just kind of toss out a crazy example. So let's say the 5 mile opens at 580 tomorrow. That means the upper bounds of the 5 mile is at 582. Well, if we're at 586, 587, that's yeah, that's a pretty large drop in price to test that level. But is that unreasonable? No, not at all. In fact, that might be, another 1 to 2 sessions away, based on how high we are being, or how high the 5 mile is actually pulling. Now, the 10 mile is starting to close in on that 570 range. It's starting to pull up towards that 200 mile, which is, basically locked on to the 570. It's slowly climbing up to the 571. The 20 mile is at the 551.56, so that's slowly pulling up to the 560. And we discussed this in the Sunday video. These levels are slowly pulling up and claiming new territory essentially. And by new territory, I mean in this cycle. Obviously, we've been to these levels before, but during this bullish cycle, this is new territory. Now, I want to turn off the moving averages for a moment, and I want to, actually, no, I want to turn on the Bollinger Bands for a second. So, this is an upper Bollinger move, and I'm going to compare this to many other upper Bollinger moves, but do you see how it's not pushing drastically above that upper Bollinger? This still counts. The reason why it still counts is because the open price on the upper Bollinger was pushed above and pushed past. So while this graph and this chart isn't exactly reflecting uh, this candle movement, we have done 2 days of the upper Bollinger. And I'll discuss the full upper Bollinger mechanics again in this video, but I just want to quickly show why the mechanics will work. It is back tested. It is something I have back tested over 1,000 upper Bollinger moves. I haven't traded those 1,000 upper Bollinger moves, but I have back tested it, and it is extremely, extremely accurate. So it very, very, very rarely fails. So upper Bollinger move right here. Okay, upper Bollinger move right here. You see how we have first day hit the upper Bollinger, second day hit a higher high, third day this was when we pushed literally the all-time highs. So we pulled that all-time high and then we pulled downward. Okay, so that's very close to what the rule set has for us right here. And that was, one of the most aggressive times. Same with this right here. Um, this is again the upper Bollinger mechanics playing almost to a T. And while this was extended slightly, we have day one upper Bollinger. It pushes the high. Day two pushes a higher high. This day three, it pushed the exact same level. It doesn't look like it, but it basically pushed the exact same level, built structure, and just started dumping. And that's how it retested the 5 mile there. Let's see another upper Bollinger move. All right, first day pushes the upper Bollinger. Second day hits that higher high. Third day, slight higher high, but it starts pulling down. Tests the 5 mile right in that range, and then starts moving from there. This was a really drastic upper Bollinger move. This was when President Trump was elected, so it's kind of a little outside the norm. But again, this was a 4 day upper Bollinger move where you could see session one pulled a high, session two pulled a higher high, session three it did not start tapering, session four it slowly started tapering but not fully. It wasn't until really that session five and session six that we started to taper. So just a couple more examples and we will move on. So I just really want to hammer on this point. Upper Bollinger move again, right here. Day one, you had the high. Day two, it pushed a higher high. It's not showing in the candle right there, but if you actually zoomed into the hourly chart, it would be very, very slightly showing a higher high. And then right in here, it doesn't look like it, but you do have the 5 mile consolidation. I can't talk right now. Right there. So it did pull down and then push back up to the higher highs. So upper Bollinger moves work very consistently. They usually like to play within the upper Bollinger range for 2 sessions, and then it starts to pull down towards the 5 mile. So what do we have going on here? we have our first day, we pulled the high. Second day, we pulled the higher high. We have plenty of bear structure going on, which we will, identify as we, pull down towards the hourly chart. But technically, we have the first day, second day, higher high. Third day, what can we expect from this? Well, it's either two things. They extend this move out, which isn't a very common thing, but it does happen. They can extend the move out, and potentially you could see a higher high from that. Um, if we do see a higher high from that, what are we expecting? Everyone has their eyes on a very specific gap, and I'm going to. Ooh, that's ugly. I'm not going to show that right now. I'm going to edit this really quick, and then I will show it on the screen. 1 second. I'm actually going to show all these drawings. So, um, we have this cup right here, and this original cup, uh, I don't have the exact value right in this second because my candles are kind of messed up because of the drawing. Um, but we have this first cup right here. This cup filled out, it built a handle, and that handle broke out. Okay. This second cup was, I think it at the 576, something for the exact amount. Um, that cup finally finished out. Okay. And what do we expect to build from this cup? A handle. Okay. Um, can we still push upward higher? Yes, we can. Well, I did not want to move that. We can. And what can we push up towards? We have a really important gap at the 595. Okay. And if there is going to be a gap taken, that will be the gap. Okay, and it will form some sort of cup like that, and then they will form, pull down some sort of handle from there. And that would coincide very well with our major selling channel. So technically, uh, they can pull upward more. Generally within the bounds of our day two Bollinger, it's saying to us that we will start to consolidate downward towards that 5 mile, but there is still a little bit of room here. Um, it's not entirely certain whether we get our 5 mile test here and then push up and then back down. Um, that's totally a possibility here, so you just need to be very aware of that. And I'm gonna discuss in just a couple seconds how we're gonna approach that if this is the scenario. Okay, but if that's the scenario, then that entire cup gets filled out. Okay, we test the upper bounds of the major selling channel, and we go from there. Now, I'm gonna quickly bring back this liquidity zone. This was an extremely let me step back. It was an extremely important liquidity zone from months back. I mean, this was back in March. Way back in November. This was a really, really key area. We broke above that level. Okay, and what's important is that the market now needs to build support and hold this level. We have a ton of liquidity right in this range, which is great, but that's in the level. Now we need it above the level. And this is actually a totally other liquidity zone, which I think I deleted for right now. I did. It was a big purple one, which I'll add back into, the video tomorrow. But we've now entered that liquidity zone, and since we have, it's very likely we're going to be pulling quite upward into that, and that can go all the way to the 611. Um, this is an extremely bullish range, but I do want to highlight just a couple things. And my cat's going crazy, so if you hear her in a second, I apologize. But I just want to hide some of this really quick and just kind of lay out the scenario of what's going to take place here. So either they take the cup and form the handle, as I said, from this range, which, my stupid cat. I love my cat, but geez Louise, man. Okay, anyway, without losing track, I'm going to delete this circle. This was the circle for the bear structure that I talked about, and then assuming this cup was built, we would, assume some sort of bear structure in this area. Potentially we can be building the bear structure here. And I'm going to use these larger drawings to show this, but technically we can be building a shoulder right in this area, the head right in this area, and the right shoulder would, technically be down in the 5 mile area once we test that, potentially down in the 20 mile range. That's what I'm looking for here. We've filled out a ton of bullish liquidity, and now we kind of need to just step back, retest some of this support, and we have plenty of levels to test. We have the 5 mile, we have the 10 mile, we have the 20 mile, we have the 200 mile. Um, and just to answer the question if we're out of the bear market or not, no, we're not. Not yet. We're not out of the bear market until all of the moving averages are above the 200 mile. Okay, so technically, while the price action is above the bear market, the moving averages are still within the bear market, and that means that technically we could still pull back downward quite a bit. Okay, and just to quickly show that, I'm gonna turn off the moving averages. We have this really, really, really huge inverse cup. This could just be a super large inverse handle for that cup, and I discussed that when we started actually building the very, very bottom of this handle, that this could potentially build upward, hit the top of this, and then come pulling all the way back down. Do I expect that right at this moment? No, not yet, but the market will tell us, and how will we know? We just follow the moving averages step by step. I'm gonna quickly go to the 4 hour chart just to take a look. And yeah, that coincides really well with the levels we got going on. And just to show you that, yeah, I already have it circled. The 595 range is right in there. That would pull right into this area, form a head, and from the head, it can then pull down to then build a right shoulder. So that's kind of the thesis for now. We don't have any data tomorrow. Uh, this was the second day of the upper Bollinger move. The day three, if we get a new higher high off of this day three upper Bollinger, then you simply just basically dollar cost average all of the current puts, because if you're following the trading strategy, then you have puts out for at a minimum of 2 weeks. Okay, and there's a purpose for that, just in case you do get that extra leg upward. The 2 weeks catches that range. And this is how you know, because we shorted in this area, right? The market has to hold above this range for a total of 5 more sessions for these puts to be worthless. Um, or no, for 10 sessions, I'm sorry, because we have 2 weeks out. So for a whole another 10 sessions, that's extremely unlikely without testing some sort of support. So that's the thesis on that. These puts should do very well. You take the puts down to the 5 mile, and at the 5 mile, you take profit on them and you set up new calls and new puts for 2 to 4 weeks out. And from that 5 mile move, you go back up to the upper Bollinger or you test the 20 mile. This is on the wrong time frame, so ignore these moving averages, but you get the point. Continue expecting bear structure from here. I know the market's looking extremely bullish, but our room upward is really nearing, and this isn't the range to be buying calls. Besides for a hedge, obviously, of course you always want to hedge your positions, but this isn't really call range. This is area to be buying shorts or, puts, and to ride down to support. So anyway, let's have a great day tomorrow. I will talk to you all in the next video. Have a good day, and yeah, see you later.